Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall after President Donald Trump imposes a 25% tariff on US imports from next week. Canada calls the levies an attack, while Japan considers countermeasures. Trump floats more tariffs on the EU and Canada if they, quote, work against the US. President Trump, meanwhile, saying he would consider cutting levies on China to secure Beijing's support to sell TikTok's US operations to an American firm. Plus, France's President Macron announces €2 billion in military support to Ukraine as he gathers European leaders for an impromptu summit to discuss their role in ceasefire talks with Russia. Happy Thursday. Another day, another round of tariff threats from the Trump administration, this time coming through from Truth Social. Just in the last few minutes, targeting Europe and Canada, quote, if they take measures against the US. We'll see how material that is, to what extent that's jawboning from President Trump versus reality as we lead up, of course, to April the 2nd. European futures now lower by around 0.6%. So taking a bit of hit on the comments from President Trump in just the last few minutes. The auto sector of Asia is under pressure on tariffs that will be coming through, 25% on the auto sector from April the 2nd. That has been signed off. That will kick in next week. FTSE 100 futures here in the UK after the spring statement of yesterday, currently down 0.3%. S&P futures stateside looking to very modest gains of 0.1% after dropping a further 1.1% yesterday. US stocks now set for their worst quarter in terms of the performance since around 2022. Nasdaq 100 futures flat after dropping quite significantly, around 2% on the Nasdaq 100 by the end of the close yesterday. Mag 7 under pressure again. Let's flip the board and have a look cross-asset. Relative stability across treasuries. The last time I checked, 434 right now on the US benchmark 10-year, with Masalam of the Fed suggesting that you could see inflation holding above that 2% target for a prolonged period because of the tariff risk. 129 right now on the pound, currently up 0.2%, largely on dollar softness. But you did see, of course, a little bit of pressure on the pound yesterday on weaker inflation. Brent trading at $73 a barrel, and gold remaining above 3,000 per troy ounce, up 0.4% in the session today. Let's cross over to Asia right now, where Avril Hong is standing by in Hong Kong with a gauge, of course, of the auto's impact from the tariff threat from Trump. Avril.
Absolutely, Tom. I mean, that's the drag you're seeing in Japanese, South Korean benchmarks today. But we're also seeing the chip makers or chip-related stocks moving lower. So the TAIEX also among the gauges that are underperforming in the region. And of course, no prizes for guessing why. This is the setup in Asia, given how Trump's saying these auto tariffs are go next week. And also we had those NVIDIA sales, a bit of a question mark, given how China's new rules could affect advanced chips. That's the drag we're seeing in the region today. But the Chinese stocks are underperforming amid their rotation out of US tech names. So just keep that in mind. Now flip the board. Just wanted to highlight the drag on the likes of the topics in Japan. It's really the transport sector. And if you take a look at this chart, you'll see how that is the sector that's kind of leading the gauges in Japan lower. This is also against the backdrop of not just the potential tariffs next week, but what Japan might do, because the Prime Minister did signal they're not ruling out countermeasures. Some analysts have already highlighted that when it comes to the impact ultimately on Japan, given how these tariffs could be taking place across all nations, maybe this means for automakers that they retain some relative competitiveness. We're seeing the yen today among the currencies that are outperforming in the region, but keep in mind, automakers seen as a bit of a benchmark in corporate Japan. If they are hit by levies, what does that mean for wage growth as well as the path for the BOJ towards rate hikes?
Avril Hong in Hong Kong with a check, of course, on the auto sector, and that is where the pressure is on the Asian market today on those 25% tariffs being announced by President Trump. Avril, thank you. Let's get more details on that story and announcement then. President Trump announcing a 25% tariff on auto imports, as we said, from next week, just a few days before he is expected to unveil a broader set of so-called reciprocal tariffs.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
Canada's Prime Minister, Mark Carney, called the tariffs a direct attack on workers in the auto industry. Meanwhile, Japan's Premier says he is not ruling out countermeasures.
We must consider appropriate responses, and naturally, all options are on the table. The bottom line is that we must consider what will best serve the national interests of Japan.
OK, so the global nature of these tariffs been illustrated with the commentary we're hearing from Canada and Japan. Bloomberg's East Asia government editor John Herskovits joins me now from Tokyo, so central, of course, to what is happening in terms of this tariff story on the auto sector. John, who is likely to be affected most as a result of these 25% levies?
Well, it looks like in the short term there are going to be a lot of losers and not many winners. In terms of auto manufacturers, almost everyone, the major manufacturers, are exposed in some way or another. The two biggest firms in terms of bringing imports to the U.S. for sales are Volkswagen and the Hyundai Kia group. But it's just not these companies. Toyota's exposed, and also U.S. automakers have exposure to imports. It varies to the degree for the company, but there are also U.S. jobs at stake. You have a company like Toyota, which has manufacturing facilities in various states in the U.S. These places use components, transmissions, engines that some of them are imported, and they would be subject to tariffs. This could hurt manufacturing in these states and hurt U.S. jobs. For the consumer, these tariffs are expected to add thousands of dollars to the prices of automobiles. This cost increase comes at a time when consumer confidence is waning in the U.S. and just isn't good for the overall U.S. economy. So it's just really difficult to find who is going to benefit in the short term from these tariffs. A lot of places are going to be affected by them.
Yeah, Dan Ives, to your point, Dan Ives of Wedbush Securities saying that ultimately, longer term, this could add $10,000 to the ticket price of cars stateside. What are some countries then looking to do? We heard from the Japanese, we've been hearing from the Canadians. What do we understand about the international response to these tariffs?
At this point, we're just in the discussion area. EU is discussing, South Korea's government is holding a meeting to discuss this. You heard from Prime Minister Ishiba. Canada's Prime Minister said this was a direct attack on the country. If we go back to the steel and aluminum tariffs, there were the EU and Canada took action relatively quickly, looking at certain U.S. products to target. In the case of Japan, if you're thinking that Japan may slap tariffs on U.S. automobiles, it may not have much of an effect. There aren't a lot of U.S. cars that are being sold here. But Japan imports a lot of agricultural products from the U.S., and this could be a sector that is something. It comes to the minds of Japanese policymakers if they decide to go that route, to find something retaliatory to hit the U.S. with in terms of the auto tariffs.
OK, Bloomberg's East Asia government editor John Herskovits on what different countries may be thinking about in terms of a potential response to these tariffs. Let's drill deeper into this story now, because Asian automakers, of course, under pressure following US car makers lower after the announcement around 25% tariffs on that sector. Let's bring in Bloomberg's China cars reporter Linda Liu for some further analysis. Linda, talk us through the impact on the motor industry, given this isn't just about targeting cars themselves, but all the components, as John was saying, that go into them.
Yeah, as you've already discussed before, a lot of these automakers are going to feel the pain from the tariffs. These are going to raise their costs, not just on the whole vehicle exports, but like you said, the auto parts are also going to be impacted. Now, we know that Mexico and Canada is two really big countries where the automakers have bases to manufacture parts. We've had analysis in the past, some of these auto parts, cross through the border between US and Mexico or US and Canada multiple times during the production chain. And if each time the 25% tariff is going to be levied, the additional cost is just going to skyrocket. And looking into financial impact to the Asian automakers, Toyota, Honda and Nissan have been forecasted by analysts that their operating profit by the fiscal year 2026 could take hundreds of millions, if not billions of dollars of hits just from this tariff impact.
Bloomberg's China Cars reporter Linda Liu on the granularity of this story, what it means more broadly for the auto sector, not just, of course, of Asia, but also Canada and Mexico. Thank you, Linda. Let's get the market reaction then to the latest lines. President Donald Trump suggesting further tariffs would be imposed on the European Union and Canada if they work together, quote, to do economic harm to the US. This coming through on Truth Social just in the last few minutes. Let's dive deeper into the market reaction with Bloomberg's Valerie Teitel. Valerie, what are markets making of this latest line from Trump on the tariff threat?
Tom, this latest line from Trump is seeing the dollar strengthen slightly against the euro, against dollar CAD. If you just take a look at the chart behind me, this is the euro dollar intraday chart. It's paired some of its gains after this recent threat from Trump that he will counter with retaliation if the EU and Canada plan to do anything against these car tariffs. Let's flip on and just check on how the loonie is trading. Dollar CAD also with the Canadian dollar weakening on these headlines as well. The market, though, Tom, is relatively muted, though, when it comes to FX. I think it's hard for the market to read through just how much retaliation is going to go on. If these tariffs were implemented without any retaliation, that definitely would be a dollar stronger picture. But right now, it's a bit muddled with this tit-for-tat retaliation going on. It's hard for the equity market to parse this through as well. S&P futures are just slightly in the green, but it should be noted the S&P 500 yesterday had a decent slide. It slid below its 200-day moving average after closing above it for 2 days in a row.
OK, this is the timely market analysis that, frankly, you only get on Bloomberg. Bloomberg's Valerie Teitel, thank you very much indeed. Here's what else to be thinking about today, then. 8:30 a.m. UK time. The BOE's Swati Dhingra speaks, of course, after the spring statement and after softer inflation. So listen in to that as well as markets pull forward bets around a May cut for the BOE. 12:30 p.m. UK time. It's the US jobless claims and revised fourth quarter GDP. So important in terms of the latest gauge on the health of the US economy, of course, as concerns continue around a slowdown there. 8:30 p.m. UK time. The Fed's Barkin will speak. This after, of course, we heard from Salem suggesting that inflation could be stickier as a result of these tariffs. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, European leaders meet to discuss Ukraine today. We discuss the bloc's ability to assert itself in negotiations amid the US-led ceasefire talks. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Thursday. Donald Trump says he will impose more tariffs on the EU and Canada if they, quote, work against the US. The European Union expects Washington to apply a double-digit tariff rate across the bloc when the US president announces a package of so-called reciprocal duties on April the 2nd. For more on the EU response, let's bring in Bloomberg's Oliver Crook, who joins us from Paris, where EU leaders are meeting as well. Ollie, what steps then is Europe taking ahead of what Trump is describing as Liberation Day next week?
Yeah, Tom, they're taking a sort of wait-and-see approach to a large degree, waiting for the actual imposition of the tariffs. I mean, we already had sort of high-level negotiations happening with the trade minister here for the European Union in sort of Washington, D.C., and with a number of other U.S. officials throughout the week. That failed to sort of yield a breakthrough. Basically, what we understand is that the U.S. administration is reluctant to make any sort of concessions and to have any sort of negotiations until these tariffs actually go into force next week on April the 2nd and begin to actually pick up these levies on April the 3rd. I think that this sort of greatest concern for these sort of European leaders who are trying to appraise the broad sort of message from Donald Trump. Yes, we know what he wants. He wants to right a sort of goods trade balance that exists within Europe and the United States. Remember, that's $1 trillion trading relationship. The deficit for the U.S. is about $250 billion. But the real question, I think, for these European leaders is how expansive a view is he going to take on these sorts of things? And it's not just goods, right? We're talking about services. The U.S. runs a surplus on services. That doesn't seem to come into the equation. Does he also want to attack the value-added tax for European leaders? This is another part of the sort of the calculation for Europe. And again, it is not clear how far he's willing to go and use these trade tools to get what he wants. And if he managed to get concessions, maybe he'll want more. And this is, again, the sort of perennial issue for these European leaders who are trying to establish a way to sort of negotiate with Donald Trump. And I think one of the great risks, Tom, and this is something that we talked to about with the Prime Minister of Ireland last week, is that this could also create sort of fragmentation within the European Union. We understand right now that the United States will target the EU as a whole, but what if he says, you want to make a carve-out for Hungary because we get along better? That could cause a lot of problems at the sort of unity level for European leaders.
Yes, so that's on the trade front, Ollie. And obviously you're in Paris because there's a meeting as well of leaders when it comes to how Europe positions itself in these ongoing talks when it comes to a potential ceasefire between Russia and Ukraine. What are you expecting to take place in Paris? How much progress can they make?
Tom, we should sort of remind people what this meeting is because we've had so many summits, basically emergency summit every single week. This is the summit of the sort of coalition of the willing, so-called. About 31 nations are going to be represented here. This is sort of a lot of the EU nations, but it's not just EU. Some NATO members, you're going to have the Canada represented here as well, Norway, and this is all basically about collective defense efforts within Europe. And what we're sort of expecting here, because this idea of the coalition of willing is still somewhat fluid, we're not entirely sure willing to do what. What it has to do is with security guarantees going forward for Ukraine. We know that the U.S. administration wants to take a smaller role in any kind of long-term durable ceasefire in terms of the peacekeeping operations. So this is a chance for European leaders to actually put meat on the bone and explain how many troops are they willing to commit and in what capacity, critically, Tom. This is one of the great questions. I spoke to the Lithuanian president last week who said for the very first time that they're willing to commit troops. They don't have the exact figure yet, but these are the sorts of conversations that we're going to be having here in the Élysée, Paris, in this sort of coalition of the willing that's been organized by Keir Starmer and Emmanuel Macron, really front-loading and really spearheading these efforts for the new sort of paradigm of European defense.
Ollie, what is the expected US response? What do we understand about the way that Washington is thinking about the UK, largely, as you say, the UK and France's efforts to put together this coalition of the willing?
Tom, I mean, you ask, I think, a very, very good question, because to a large degree, it's not even clear that the United States is going to get on board with a European force within Ukraine. I mean, I think the idea here is to give Trump a sort of menu of different options of what the Europeans are willing to do in order to sort of win goodwill with Donald Trump. But we don't know to what degree he's able to, what degree he's asking for these things explicitly. We don't know to what degree he's going to be on board with Putin's demands, which, by the way, he said no European troops in Ukraine in sort of a durable ceasefire situation. So again, a lot of this stuff is sort of making policy into the dark. And part of it is, listen, this is what the Europeans need to do for their own good without sort of Trump being involved in terms of kind of what his demands are. But as you say, Tom, it's not very clear. There's not a huge amount of communication between the Trump administration and European leaders. And for them, it's really just trying to come up with an architecture of of their own sort of strength and being able to stand up in sort of a situation where they're not getting a whole lot of comms from the U.S. administration, apart from the very broad strokes from what we're hearing from the administration.
Yeah, and as you've reminded us before, they're still looking for that point person, aren't they, in Europe to liaise and communicate with the US. Bloomberg's Oliver on the ground for us in Paris as that event, of course, takes place, hosted by Emmanuel Macron today. We'll keep across that story for you. Now, coming up after the break, US Senator Elizabeth Warren warns that the Fed chair's job is not safe under President Trump. We bring you more from our exclusive interview. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Thursday. President Trump says no harm was done after a journalist was accidentally added to a high-level Signal chat discussing military attacks in Yemen. Newly disclosed texts show Defense Secretary Pete Hegseth revealing specific operational details. Trump and his team say the information was not classified, but lawmakers, including some Republicans, are calling for an investigation. Democratic Senator Elizabeth Warren told Bloomberg exclusively that Defense Secretary Pete Hegseth should be fired if he refuses to step down.
How many other times are they using Signal, and what are they using it for? So this is a moment, we need some of those congressional investigations. We need a hearing in the Senate. We need a hearing in the House.
Elizabeth Warren also says President Trump could fire Fed Chair Jerome Powell as part of a purge that she thinks may disrupt U.S. markets. Warren had opposed Powell's reappointment during President Biden's term due to his support for reducing financial regulations. But she told us exclusively she stands behind the independence of the Fed and other government agencies.
He can just mow through the Consumer Financial Protection Bureau. It's a form of lawlessness, and all the power belongs to the king, that it suggests nobody is safe, not even the chairman of the Federal Reserve.
OK, so from the Fed to the banking space, where Jefferies shares fall sharply in after-hours trading after its first quarter earnings declined due to a drop in investment banking and capital markets revenue. The company's activity was hurt by uncertainty around US policy and geopolitics. Is Jefferies the canary in the coal mine for the broader financial sector in the US as we lead up, of course, to earnings season? Coming up, UK Chancellor Rachel Reeves, of course, outlining her spring statement, clawing back, of course, and pushing through with some cuts to get that headroom. Still just less than £10 billion in terms of that headroom. We'll get analysis in terms of that spring statement, where it leaves, of course, UK markets as we lead up to what some think could be tax hikes in the autumn from the UK Chancellor. Let's get to the tech story right now, because we'll get back to the UK story. TD Cowen analysts say Microsoft has cancelled new data center projects in the US and Europe due to an oversupply of computers that power AI. They say the move reflects Microsoft's earlier decision to pass up some new business from OpenAI. In a statement, Microsoft says it remains well positioned to meet increasing customer demand. And that analyst note from TD Cowen weighed on the stock of Microsoft. You also saw Mag 7 dropping more heavily again by the end of the close yesterday. Another challenging day for the Mag 7 yesterday, and US markets now set for their weakest performance on a quarterly basis since 2022. Let's check in on the markets right now as we weigh up the latest commentary from President Trump around tariffs. He's threatening Europe and Canada in his most recent commentary on Truth Social. Let's take the markets if we can, please, because that is weighing on European futures, as is, of course, the signing of a decision to impose 25% tariffs on autos from April the 2nd. You can see European futures down by 0.5%, close to 0.6%. So watch the German automakers in particular on the back of that news. Here's the impact on the Asian automakers. This is dragging on the MSCI Asia Pacific, particularly in South Korea and in Japan. The pressure's being felt. Tokyo, of course, and Toyota down 2.2%. Nissan is down more than 2%. Honda also taking a hit, as is Mazda. And over in South Korea, you have the likes of Hyundai as well. Let's flip the board and have a look. Korean auto stocks, Hyundai under pressure. That's despite the fact that the company is committing to extra investment, of course, in the US, partly to try and offset that tariff threat. Hyundai currently down 4.5%. And Kia taking a knock as well. Japanese lawmakers suggesting that they are weighing up a response to these Trump tariffs. There's plenty more coming up. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks fall after President Donald Trump imposes a 25% tariff on US auto imports from next week. Meanwhile, Trump suggests further tariffs on the EU and Canada if they, quote, work against the US. President Trump also saying he considers and will consider cutting levies on China to secure Beijing's support to sell TikTok's US operations to an American firm. Plus, France's President Emmanuel Macron announcing €2 billion in military support to Ukraine as he gathers European leaders for an impromptu summit to discuss their role in ceasefire talks with Russia. We have a redhead crossing the terminal right now as we bring you a check on the markets and, of course, European futures under pressure on the latest tariff salvo, rhetorical and real, from President Trump. Here's the redhead, though, before we get to that detail. France's 2024 budget deficit coming in at 5.8% of GDP. That is slightly less bad than the government estimate of 6%. So maybe a little modest amount of good news for France as it struggles, of course, to rein in those budget deficits. Less of a budget deficit last year than had been expected. European futures under pressure, down 0.6%. That is largely tariff-related. Watch the automakers at the open, 8 a.m. UK time there. Asian counterparts have been hit fairly badly as a result of these 25% tariffs expected to kick in next week and the additional threat on Truth Social from President Trump. FTSE 100 futures currently down by 0.3%. This after the spring statement, of course, and we expect to hear from the Chancellor, Rachel Reeves, later in our programming. S&P futures currently pointed to gains of 0.2% after dropping more than 1% yesterday. Nasdaq 100 futures currently range-bound after dropping around 2%. Mag 7 under pressure again yesterday. The US benchmark 10-year yielding 4.34, largely unchanged. The Fed's Masalem says that getting to that 2% target is going to be tricky given the tariff threat and the potential impact on inflation. Euro-dollar at 107, up 0.2%. And you're looking at oil prices around $69 on WTI, currently down 0.1%. And gold holding above $3,000 per troy ounce on the yellow metal, up 0.3% in the session today. Let's get back to the UK then. Chancellor Rachel Reeves announcing a raft of cuts in her spring statement to fill the hole in the country's finances after the growth forecast was slashed in half. Here's what she had to say on what it would take to restore it.
As the previous government learned to their detriment, there are no shortcuts to economic growth. It will take long-term decisions. It will take hard yards. It will take time for the reforms that we are introducing to be felt in the everyday economy.
Bloomberg's Lizzie Burden joins us now for more. She was covering all of this for us yesterday. Yields were down, markets and gilts were bid, yields a little lower. Growth forecasts for the years ahead, not this year, but coming years, have been revised up by the OBR. Is this time for a victory lap for the Chancellor?
Well, it was very different from October, wasn't it? Do you remember when Rachel Reeves sat down and yields went up? And it's, as she points out there, very different from the Liz Truss experience back in 2022. In fact, it was, I think, one of the best days for gilts so far this year. But to me, what is so revealing is that Truss is so scarred by that Liz Truss experience that she restored her headroom to exactly where she left it in October. £9.9 billion, the third smallest headroom in history, and that leaves her hostage to fortune, Tom, because if it could be eroded between October and March, look at the chances of it being eroded again before the autumn. And I put this to the City Minister, Emma Reynolds, yesterday when I spoke to her in Westminster. Take a listen.
It was a spring statement which is providing some reassurance to the market that we have restored the headroom in full, that we're going to be meeting both our stability and our investment fiscal rules 2 years early. It was right that we did that. We need economic stability to build upon that, to ensure that we can invest in our public services. We're already seeing some of the fruits of the investment that we announced at the autumn budget, with NHS waiting times coming down for their 5th month in a row. And obviously 3 million of the lowest paid workers will get a pay rise next week with the minimum wage going up.
But this is a crucial question, and the markets make assumptions if you don't fill in the blanks for them. The Chancellor said she's wedded to her fiscal rules. Between now and October, if yields go up, do we assume that there are going to be more tax rises to come?
Well, I'm not going to comment on hypotheticals. We have a fiscal headroom which is 50% higher than was under the last government. It's right that we have that fiscal headroom. It's right that we abide by the fiscal rules that are non-negotiable. We saw what happened in 2022 at the mini-budget when Liz Truss just, we all remember the irresponsibility of that time and the impact that is still having on some people who remortgaged afterwards. So, we are a responsible government. We promise people change, but we also promise people that we would restore economic stability.
So they're scarred by the Truss experience and therefore clinging to the fiscal rules, but the cost is political disquiet in the short term and uncertainty for the many months until the October, November, autumn budget.
Okay.
I'm so glad that we've got the Chancellor on today to ask her that same question.
Yeah, we'll be asking that question, of course. Lizzie Burden, thank you very much indeed. We look ahead, of course, to that interview with the UK Chancellor, Rachel Reeves, later, of course, 8:40 a.m. UK time. So stay tuned for that interview with the Chancellor. Let's get more perspective now and analysis and bring in Bruna, Skarica, Chief UK Economist at Morgan Stanley. Bruna, thanks so much for coming to the studio. Wait, maybe I'll start with that question then. The headroom that the Chancellor has left herself, less than £10 billion, as Lizzie was illustrating for us. Should the markets be bracing for tax hikes in autumn?
Well, as the City Minister suggested, it's hard to comment on hypotheticals. I think what's really interesting about this OBR document is just the amount of risks that do not feature in the base case. So, for example, there's 3 different scenarios around US import tariffs. Obviously, we got some news overnight. There's more news likely coming next week. Risks, I would say, to GDP growth stemming from those global developments are likely skewed to the downside. And just a 60 basis point move in gilt yields could obviously erode that fiscal space. So I would say the fact that the headroom is still pretty small in historical terms, around £10 billion, does mean that there is a lot that can kind of knock us off course from that base case that's presented.
What are you modelling around the tariff impact on the UK economy?
Sure, it is quite a challenge to know obviously what the base case will be over the course of this year. I take my input from Morgan Stanley's great public policy team, who are actually more focused on the likelihood of tariffs on the EU and Southeast Asian countries being announced next week. And so in that sense, it's more about the indirect growth impact on the UK, which is still pretty capped, 10 basis points perhaps maxed over the course of this year, depending obviously what gets announced next week. That can be adjusted, and I would say the risks to those moderate estimates are certainly skewed to more of a hit. OK, so 10 basis points, but you think that's conservative, and that's with tariffs imposed on Europe and Asia, and that's
on certain sectors.
On certain sectors, and that's potential impact on the UK. OK, so that's one metric that we should be thinking about. The markets, as we said, responding pretty positively yesterday, yields lower. Do you expect that trend to continue? The picture, of course, is that since September, yields are up about 100 basis points on the benchmark 10-year gilt. Where do you see yields going in the months ahead? How wary are the bond markets at this point?
Sure. So I think there are a few factors to think about. First, gilts are a beta to global market moves. So we do need to think about what's going to happen in the US, what's going to happen in Europe. There is quite a lot of issuance that the markets will need to absorb coming from the EU countries as well, it seems. I think the key driver, of course, is what happens with inflation and interest rates at the front end of the curve. So there we are a little bit more constructive than I would say what the market is pricing at the moment. And we do think the Bank of England could cut a bit more, perhaps by the time we get into the period relevant for the autumn budget. So that could be helpful for Chancellor Reeves. But I would say that's probably my greatest focus at the moment, and what I think will ultimately drive the 10-year.
So do they cut? You think they cut in May? And where do rates end?
I think by the end of the year, they could be as low as 3.5%.
But we haven't always seen a correlation between rate cuts and yields lower in recent times.
Of course.
Where does that leave your view on where the benchmark 10-year is? And we're at 470 right now.
Of course.
Do we get to 450, sub 450 by the end of the year?
Of course. I do think that kind of the further out you move in the curve, the importance of fiscal policy is higher and greater, obviously.
Right.
So the one thing I think is important to stress in all this debate about fiscal headroom and fiscal rules is that ultimately what the market cares, obviously we all care about debt sustainability and what happens 5, 10, 20 years further down the line. But the important thing is what happens with gilt issuance in year one. And in that sense, yesterday was a good news for the gilt market because gilt issuance, gilt remit came in at just below £300 billion. Obviously, consensus as compiled by Bloomberg was looking for something at 302. So I think as opposed to just thinking about whether, for example, taxes would be hiked 5 years from now, the important thing for the market is whether issuance will be capped at current levels over the course of next year as well, or whether we're going to go into another fiscal event with possibly 20, 30 billion pounds more of issuance. That's something that could drive upwards pressures.
On growth, the OBR factored in some changes around the reform of the planning system, for example, and controversially to some, and projecting growth of around 1.8% in the years ahead, beyond 2025. Does that align with your view on the growth trajectory for the UK?
I would say this still leaves the OBR as probably one of the most constructive forecasters in terms of UK's medium-term prospects. I would say my own forecasts are between, let's say, the Bank of England, that's on the more conservative side, and the OBR, so around 1.5%. I do think it's fair to start thinking about some of the consequences or some of the impacts of these regulatory reforms that are not difficult to score but are important to drive growth in the UK. Obviously, the main question is what will happen with productivity growth assumptions going into the autumn. They are quite punchy. We're talking about an average of 1% a year over the course of the next 5 years. David Miles, speaking yesterday at the OBR press conference, said this is a midpoint of where we were pre-GFC and post-GFC. It's a fair estimate because we don't know what the next decade will look like. But the longer the measured productivity remains as weak as it has been in recent years, the more difficult it is to persist with that assumption. And that is a big, big risk for the Chancellor.
Yeah, and the UK government putting a lot of hope on AI to do some heavy lifting around productivity. Thank you so much for the analysis. Very timely on the back of the spring statement. Bruna, Skarica, Chief UK Economist at Morgan Stanley. The BOE does cut in May, is her view. Now, some other stories making the news this Thursday. Former US Trade Representative Charlene Bashevsky says China is running an unsustainably imbalanced trade relationship with the rest of the world. She spoke exclusively to Bloomberg at the HSBC Global Investment Summit.
China is exploiting manufacturing, suppressing domestic consumption, and expects that the world can live with $1 trillion Chinese trade surplus, which most certainly the world cannot.
And staying on China, Bloomberg has learnt that China has told state-owned firms to pause new deals with businesses linked to Li Ka-shing and his family. This after the Hong Kong billionaire initiated, or at least irritated, Beijing with his plan to sell 2 Panama ports to a global consortium. President Trump says he would consider reducing tariff rates on China to secure a TikTok deal. He added that he would be able to secure at least the outline of a deal for TikTok by next week. Any deal would require approval not only from Trump, but from TikTok's parents and the Chinese government. And the founder of TikTok, the owner, ByteDance, of course, which owns TikTok, is, of course, the company that incorporates TikTok. The founder of that business has become China's wealthiest person for the first time. Jiang Yiming's wealth jumped by over $10 billion after investors valued ByteDance at $312 billion. The fate of TikTok in the US, of course, remaining unclear, with that April the 5th deadline for a sale or ban of its operations there. Coming up, OpenAI closing us in on a funding round that would almost double its valuation. We have the details next. It could be a record. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Bloomberg has learned that OpenAI is close to finalising a $40 billion SoftBank lending and funding round, I should say, not lending round, funding round, that would almost double its valuation to $300 billion. The AI developers funding round would be the largest of all time. That's according to data compiled by research firm PitchBook. Now to the UK, where technology firm Abound has secured up to £250 million in financing from Deutsche Bank for consumer loans. The firm says the deal further strengthens its ability to offer fairer, more affordable credit to UK borrowers. Very pleased to say, joining me now around the desk is Michelle Her, Abound and Renda co-founder and COO. Michelle, thanks for joining us. What does this £250 million then, lending facility from Deutsche Bank, what does it mean for the business? What does it mean for your growth potential in 2025?
Yeah, sure. So thanks for having me. We just raised £250 million from Deutsche Bank. That brings the total funding we raised in the last 4 years to be $1.6 billion in total. That is great news because it helps us to further diversify our funding structure and also strengthen the business resilience. We are going to use this money to grow the lending business.
OK, and what you do, which is different to high street lenders, is you don't just use credit checks, you use AI systems to look at the retail and the spending of your customers to get a kind of better sense as to their credit worthiness. What are you seeing in terms of demand for lending across this UK economy now? What is the loan growth looking like for 2025?
Yeah, sure. Let's take a step back. So Abound is a London-based fintech. We use open banking and AI to understand the customer's ability to pay. That is a very different approach from the traditional credit scores used by banks. I started the company about 5 years ago because of personal frustration. 15 years ago, I came to the UK from Singapore. I came here to work, decent pay, good job. I got a PhD in AI, but no banks wanted to lend £5,000 to me because I was credit invisible in the country. That's how the traditional credit scoring system actually works. Over the last few years, we built a very different, much better technology. We apply AI to customers' bank transaction data with their consent. We read their bank statement. We understand how much they earn, how much they spend, and how much is left. That is really focused on the customer's ability to repay back the loan. That allows us to make responsible lending decisions. It also helps us to lower the borrowing cost and expand access to affordable loans. That is our mission.
And what are you targeting on loan growth this year?
The loan growth on this year in the UK, we are targeting somewhere between 2 to 3 times.
OK, 2 to 3 times versus 2024.
That's right, yeah.
OK. What are you seeing in terms of the credit profile right now? Are your users under pressure? Are you seeing more delinquencies? Are you seeing more defaults in a slightly more challenged backdrop when it comes to the UK economy?
That's a good question. Actually, in a changing environment, the ability to provide responsible lending is particularly important. And our technology focuses on the real-time financial situation of the customers, reading the bank statement with the customer's consent, really understand their ability to pay. That actually helped us to massively understand the customer's financial situation. So over the last few years, we have lent over £700 million so far, and our default rate is 70% lower than the market. What it means is that if the market thinks that we should have 10 people in default, we only have 3. So that shows the power of the technology that allows us to lowering the borrowing cost and also makes us able to basically provide affordable loans to more people.
OK, so you have a lower default rate than some of your incumbent competitors.
Yeah.
But has that default rate started to pick up as the UK economy slows? Have you seen that pressure on
It has been very, very stable because we actually started the business at the beginning of COVID. We have experienced a lot of interesting times, the war, the inflation, the cost of living crisis. So we have been always in this kind of very interesting economic situation. And that also shows the power of the technology because we don't rely on historical data. We rely on real-time bank transaction data, really go into the customer's financial situation. That's how they allowed us to serve more people.
You go onto your website, APR 25.8%. Yeah. I go to some of your competitors on the high street, Santander, HSBC, they're offering APR of 6 to 7%. There's a big gap there, Michelle. How do you justify that?
Well, that's a very good question. So it is actually, our loan API is somewhere between 8% to like 29%. And the loan the loan size we offer is smaller than the banks. And also, if you go to the bank's website, they claim that it's like sub 10%. But actually, if you go through the journey, the interest rate you get is actually very different. So there are two situations. Some people go through the bank's website. Sometimes they get rejected, and people are forced to borrow from high-cost short-term lenders. That's my situation when I came to the UK 15 years ago. No banks wanted to lend £5,000 to me, despite the situation I have. But if Abound was there at that time, I'm a perfect customer because my credit worthiness is great. But the technology doesn't exist. 15 years ago, it still doesn't exist widely in this society. That's why we have proven that our technology really works.
Okay.
Now we offer it to someone else as well.
Michelle, what does Abound look like in 5 years' time? What are your growth ambitions for the business, internationally and product line?
Yeah, so we have scaled the business very well in the UK. Now we are looking at the international markets. We also offer our technology to other lenders and the banks to help them to make a better decision and expand access to affordable loans.
What's your key international market?
So I think the way we look at the international, one of the first filter is the maturity of the open banking ecosystem, because that's the fundamental of our technology. So UK is far ahead of any other countries in the world in terms of the open banking ecosystem. That's why we started the business in the UK. Now a lot of countries are catching up. So for example, Europe is good, the Commonwealth countries is good. US is still behind the UK, but it's still catching up. If you look at it internationally, credit scoring approach is still widely used and is outdated methodology. Okay. So we are basically changing the industry by bringing a different technology.
10 seconds left. Do you list in the UK? Do you IPO in the UK?
Well, that's a good question. We're going to see. We focus on the business, the fundamentals of the business, and open for opportunities in the future. Okay,
you turned profitable last year. Michelle He, thank you very much indeed. Co-founder and COO of Abound and Render. There's plenty more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So we are marching towards the end of the quarter, of course, and we are set, as things stand, for the first quarterly loss for US stocks since 2023, September of 2023. That's where you have to go back to see the kind of pressure that we've seen across US stocks. Of course, year to date, the S&P is down about 3%, the Nasdaq is down about 5%. That is the picture on concerns, of course, about the tariff risk, on concerns, of course, about the slowing growth trajectory of the US. But let's flip the board and have a look at the terminal, because as we build up to April the 2nd and what Trump is describing as quote-unquote Liberation Day, markets are actually a little benign. In fact, they're thinking that maybe it's going to be something of a non-event. We've had all the rhetoric leading up to it, of course, and the latest lines around Europe and Canada and 25% on autos. But in terms of the VIX, yes, a bit of a move up yesterday on the back of the autos tariffs, but the VIX has actually been trending a little lower. And in terms of that move around hedging and protection, downside protection, not a huge rush from the markets into some of those trades, which suggests, at least on these metrics, that the markets are not positioning for significant adjustments on April the 2nd. Is there complacency or is there something else at play? To what extent is this priced in already? Bloomberg Terminal users, by the way, can access these charts and others used throughout the show, of course, by going to GTV on the Bloomberg Terminal. We're going to be speaking to the UK Chancellor of the Exchequer, Rachel Reeves, about her economic growth plans after the spring statement of yesterday and the impact on tariffs. That is at 8:40 a.m. UK time, so tune in for that interview with the UK Chancellor. The opening trade is up next. They're going to be walking through, of course, the tariff story for you, the market impact, autos in focus, particularly when it comes to Germany. You've seen the pressure on their Japanese and South Korean counterparts, and then, of course, the interview with the UK Chancellor. The opening trade up next. Stay with us. This is Bloomberg.